There's nothing else I can see that I would want to do today with trading, so let me go through what I saw. When you just look at yesterday and the day before, it's kind of scary and agitating. When you look at it, you feel anxious. The bars are too big and it's just too hard to see patterns. That usually means vertically you don't have enough points on the screen. Here you have 9 points from the bottom to the top of the screen, and that's because the day is in a relatively tight trading range. That's how markets look when they're in tight trading ranges. The bars look way too big. So this bar is on my screen about 1.5 inches tall, yet it's only 2 points. When I see that, that immediately tells me that I'm in a trading range and I'm in breakout mode. Okay, the market broke above the trading range with a rather large gap. A large gap usually means that there will be a trend. If the first bar is a bear bar, first trade to look for is a short, because it could be a failed breakout, or it could set up a breakout pullback and then a long. So it's always good to short the first bear trend bar, but you should also scalp part or all. The first 2 trades of the day, if you're not sure whether or not you have a likely high or low of the day, you can just scalp everything. This is a possible high of the day, so it's okay to swing part of it. Okay, market just came down a couple of bars and then formed a very large bar that overlapped the prior bar by a lot. So the market is forcing traders to buy at the top of a 3-bar trading range, which is difficult. In general, on gap up days, I prefer quieter opens and I prefer a 2-legged pullback, but sometimes this is all you get. The entry bars are pretty strong, and it broke out above the high at the open. Now, is this a good low 2 short? Here's a low 1 here below this bar. That would be a low 2. The momentum up is pretty strong, so I wouldn't be looking to short here. I would only be looking to buy, and that's what happened. The market went down 1 tick and formed a high 1 or a breakout pullback long. The bar closed on its high. The next bar opened on its low, so the market's pretty strong. You got 3 pushes up. Is that a wedge, or is that too much of a channel to be looking for a short? To me, this is too much of a channel to be looking for a short. Okay, 3 pushes up. Doji bar. When the market is strong and you're looking to fade it, better to fade if there is a strong bear signal bar. Otherwise, it's better to wait for a second signal. So this can be viewed as a failed low 2. You could theoretically view this as a failed low 2 as well. Here's a low 1, there's a low 2. I think this is better viewed as a breakout pullback or a high 1. So that would be a failed low 2 long. In general, buying when you have double dojis like this is not ideal, but again, another pretty strong bar. Breaking above the trend channel line, relatively large bull bar. That might be the largest bull body. The market's going up. It's got 3 pushes up in the channel and an increased bull body. It's possible that's a buy climax, and if it is, the market will try to correct sideways to down for at least an hour, and usually with 2 legs. Okay, what about shorting that? Again, I wouldn't short it because it's still in a channel, and the first breakout will likely fail. Okay, now is this setting up another high 1? It's 2 legs down, down, sideways, down. That would be the 4th high 1 in a row. 1, 2, 3, 4. And that would be very unusual, especially after a buy climax. Usually after 1 or 2 high 1s, the market will start forming high 2s. After a buy climax, I'm only interested in buying 2 legs, and I may even want to wait an hour. Now, you get this double bottom, and then a smaller double bottom, a bull trend bar at the moving average. What about buying above it? At this point, I think it's probably okay to buy above it, and I probably would put my stop 2 ticks below the double bottom. I would allow for a 1 tick breakout. Here's a second entry on the breakout pullback. Here's the breakout of this micro channel. Here's the first entry. Here's the second entry. Again, I think it's okay to buy. It's also a 2HM, and you can see traders are buying the moving average. You can't even get a full tick below the moving average. Decent looking bar. Still a triple top and a triple bottom, so it's a tight trading range. That's breakout mode. This entire thing is breakout mode. Okay, this is a good bar. I mentioned it at the time. You have a breakout with a bull trend bar, and then an II breakout pullback. After a good strong move like that, that's usually a pretty safe long setup. I would limit orders. Another test of the moving average, breakout pullback, still a little high in the tight trading range. This is going to be a trend resumption day. I'm not expecting the resumption to occur until 11:30 or later, because that's when it typically occurs. So I'm not eager to buy up here. I still think buying the moving average on a limit order is fine. Now you get a one tick high. You get a double top here. It broke out by one tick. It has a first signal to go short here, and then setting up a second signal short. What about shorting that? Is that a strong short? No, just look what's in front of you. You have a tight trading range, and traders are buying the moving average. That is not a strong short. To me, it's in a bull channel. Yes, it's not making much progress, but this so far is setting up as a trend resumption bull. For me, I'm only looking to buy moving average and continue to buy sell-offs. At some point, I'm looking for a trap to trap bears. Maybe it'll come below this low by a tick or two. Maybe it'll come below this low by a tick or two. I think that's the most likely thing. Another possibility is that this becomes a final flag and the market pops out to the upside and reverses. I'll trade that as well. Okay. Bar reversal, buy up here. I think you can buy anywhere and just place a stop a couple ticks below this. And even if you get stopped out, re-enter if it reverses up and turns into a bear trap. Okay, another 2-bar reversal and another one tick high. You have a double top, a breakout by one tick that pulled back, and then this high, the market broke it out by one tick and pulled back. Is this a strong short? No. The same thing that I've been saying all day long. You can only short really, really strong looking setups, and with this going on this long, the only thing that I'm going to short is a significant breakout that clearly sucks longs in and then immediately reverses down. That's the only thing I'm going to short. Same thing, another close below the moving average by a tick or two. I mentioned somewhere in here that usually the third time you get a breakout, if you have a one-tick breakout and then another one-tick breakout, if the market goes above the second one-tick breakout, the breakout usually is for real. So this was likely going to be a good breakout. And at that point, I flip up a 1-minute chart, either buy at the market or I look for a 1 or 2-minute high one to buy and place my stop below my entry bar. Another nice bar, and then I think the market went to an II. It's always an okay setup and a strong bull, but it often becomes a final flag. You always have to be ready for that, for the market reversing afterwards. Okay, you get this bear inside bar. You get range expansion, so it could be a little buy climax. And you could argue that it's a little wedge here. I mentioned that as soon as I saw the weak close of this bar, that's where I think people should get out of their longs. The odds are very high that it's going to trigger, that the market is going to trade below that bar, and that's where you probably would be exiting anyway. But since the odds are so high, why wait? Just get out at the market. What about shorting this? You get a final flag. This whole thing could be a final flag. There's plenty of room to the moving average. In hindsight, I should have shorted it. I think it was a reasonable setup. But at that point, I'm just thinking, get out of longs, and I didn't. Going into Monday, a final flag is a very strong magnet, and I think the market will trade down into this early on Monday. Probably in the first half hour or so. And the daily chart looks like it's going for the double top. The market's clearly overdone. My guess is the market will go sideways, once it's back up into here. Maybe we'll go up on Monday a little bit, but I bet we'll get a soft close, and I bet we'll go sideways for a few days. 60-minute, we're at the top of the channel. Hit the channel line several times. Normally that either results in a breakout above the trend channel line or a breakout to the downside. It usually doesn't keep walking up the trend channel line. It usually gets away from it pretty quickly. 15-minute, again, a possible final flag, and 5-minute